Hey, what's going on everyone? Welcome to the Nomad Hedge. Hope everyone have had a great week so far. So in today's video, we're briefly going to go through the market action yesterday and see how far this rally can continue. We're going to take a look at the major indices as well as some interesting action on the dollar index, the VIX, and some other things. If you're new here, welcome to the channel. Feel free to subscribe and hit that like button if you're enjoying the content. So let's get into the video. Alright, so we had a strong week yesterday. The S&P was up more than 3%, the Nasdaq was up 4.4%, and the Dow was up more than 2% as well. The Russell 2000 almost 3% at 2.72%. We're going to take a look at the dollar index and the 10-year treasury as well as the VIX, and also go through some of the market indices as well. So let's begin by taking a look at the put-call ratio for now. Now, we've had a strong up day yesterday on the put call ratio, up 9.46%. So we're almost approaching that 1 in the put. So it just tells me that, you know, people probably want to hedge at this point because, you know, the market's been up, especially in a day like this, like strongly more than like 3%. And so we might actually have hit a peak here. So, but I don't want to make any calls here, but I'm just saying this could be the reason for that. And so if we take a look at the dollar index and say what's happening here, as I said in a previous video, I thought to myself that maybe the dollar index would start to move sideways from here. And it looks like we've had, you know, sort of like moved sideways for now. It seems to have a problem moving below this 0.5 level, so we'll just have to see how strong the move's going to be to the upside for now, because we hit some we've hit this bottom a couple of times, and so for now I just think the dollar is just going to go sideways from here, and but the ultimate target is going to be 0.618, I believe, in the intermediate term or in the near future within 1 or 2 months here, because the downward trend is still intact on the dollar index. So for now, everything is quite red here on the weekly chart. We've not seen any exhaustion to the downside, so obviously the bias is still to the downside. But because we've been down so much now, I would not be surprised to see any updates for now. And that would obviously not be so good for equities. And so if we take a look at the VIX, for instance, the VIX is also telling us an interesting story here. As we're seeing the VIX, we had this open gap here in the 15-minute chart. So we closed the gap yesterday. And so now what remains to be seen is if we're going to close this gap as well. This one goes back to mid-August. And so if we're going to close this gap, that means the VIX needs to go lower. And so that's going to support equities as well. But again, I mean, we're so much down in the VIX right now. And when we're seeing so strong gains in the major indices, I mean, everything could just be due for a pop here, right? So be cautious, take a look at the VIX, take a look at the dollar index, and see how these two correlate with each other. Obviously, when the dollar index goes down, supports equities to the upside, and then the VIX sort of like goes down in that regard as well. But I mean, a VIX at 20, it just feels like you just want to buy at this point, because anything, you know, in the 20 area, I'm a little bit bullish. I just want to step in, right? But if we take a look at the VIX here on a weekly chart here, we're almost approaching this fib retracement of 0.618 here. So maybe it bottoms here. If we take a look at these trend lines here, I mean, this is it's a bear flag, right? So if the VIX would continue to close lower from here and this bear flag actually plays out, we can see the VIX continue to fall. And so the next line of support is this previous low here. And this goes back to mid-May. So the VIX is still trading pretty low, and so that's bullish. So I pointed this out in a previous video. We do have a falling wedge here, and it looked pretty tight here for some time. And now we broke above this thing, but it failed. So now we're sort of like testing this lower high trend line again. So we'll see if the 10-year is going to prove this pattern correct. That means we're going to see the 10-year continue higher, or this could be part of a, you know, a breakdown, a complete breakdown of this channel here that I mentioned also in a previous video, that we do have a rising wedge here. But what I mentioned before was that I probably could see this thing go another leg up higher before we're moving down. So, but it's hard to say right now because obviously on the MACD we're seeing a sell signal here, and we still have some downward potential here on the RSI. So this could be the one that breaks it down or not. We'll just have to see how this pattern plays out in the coming days. And let's also take a look at the 2-year here. So the 2-year have also stalled. We are seeing some support action here on the 2-year. So if we're gonna break this, if we just take a look at this pattern here, this is a bearish pattern, right? So we're seeing a lower high trend line here with solid support here. So if this is gonna test again, I see a complete breakdown here on the 2-year as well, which is gonna follow the 10-year as well, because the spread between these two are widening at this point. So I would not be surprised to see the 2-year following to the downside as well. So on the sector side, we can see here that technology, we saw consumer discretionary, making big gains, as well as communications. Now these are the most beaten down, right? So these sectors within the S&P 500 are still within this downward channel that they've been trading for months now. Okay, so it's the most beaten down stocks that are seeing an uplift here. So that just tells you, like, okay, can we really trust this thing to the upside? And you know, can we make the call of this like a new bull market, whatever? Again, you have to consider where the dollar index is now, where the VIX is now, and if we're seeing the dollar index still holding up to that 5.5 level, and you know, just move sideways from here. I mean, any move to the upside on the VIX and the dollar index, these things are going to get crushed. So just be cautious when you see so much in the most beaten down sectors. Okay, so that's been technology, consumer discretionary, and communications. So these are your Apple, your Microsoft, your Nvidia. You got Amazon, Nike. We're looking at Meta, you know, Netflix. So just be cautious. These could be just the fake breakouts here in these channels. Yes, they're down a lot, but that doesn't mean they can't continue to go down lower. Well, let's move on now and take a look at the major indices and see how things are faring out in the S&P 500 to start with. All right, so let's take a look at the S&P 500. Now, we almost closed this open gap we had here yesterday, but we still left it open. Again, we have to take a look at this previous high here and see if SPY can actually break above it. That would not even equal to a 50% extension here on the Fibonacci. But we almost avoided here a sell signal on the MACD. And I mean, if you take a look at the volume here, it was pretty much low volume during, you know, Thanksgiving and Black Friday and the holidays during last week. So all of a sudden we're seeing a huge volume here, just because maybe people are coming back, right? And so this just tells me, like, I don't know if I can trust this rally. Is this just because people are coming back? Is it because of that Fed speech, you know, saying we might gonna slow down starting December? So that could just be a, you know, pump rally before the inevitable. Now, if we take a look at the S&P here on a 2-hour chart, we broke above this resistance line here. And now we almost found resistance here at this previous high here, although we're not getting above that high yet. So there's still some supply here that's fighting the S&P at this point. But I mean, this thing was up even more than 3% anyway. So it's going to be interesting to see how the market's going to fare out now on Thursday. And I'm looking at the futures market, and for now everything is red. So only the Russell is green. You can't really trust this thing, in my opinion, until we're above back here in mid-September. And so this is going to be the pivot point, in my opinion. And obviously that was because of the strong gains. But we could likely fall below it as well. I mean, look here. We were above the 200-day moving average February, March this year. And then everything just fell down again. So that's why, you know, it's more about the internals as well, previous highs. And we'll have to see how this thing's going to fare out at this point. Let's take a look at the S&P here also on a weekly chart. We're not seeing an exhaustion to the upside, so everything is looking good on the weekly so far. And obviously the RSI still has some potential to the upside. Even on the monthly chart, everything is looking good. We did have an exhaustion here to the downside, so the MACD is flashing some bullish action here, getting into a buy signal here on the MACD. So that was it for the S&P. Let's take a look at the Dow as well. Now the Dow, obviously it's above all key moving averages here, so we can just remove these. We're above this previous high here. Same here, we found resistance just below this previous open gap here, which there's a lot of supply at this point in these areas. The Dow is looking good as well. Same here, you know, the volume we saw last week, and then all of a sudden we have a huge day to the upside. But I mean, look at the MACD, it's overextended. And so the internals are telling us that things are not looking good here. Now, we did break below this rising wedge here, but again, if we look at the RSI as well here, we're reaching overbought levels. So also take a quick look how things are faring out here on a weekly chart. And the MACD is also looking pretty good at this point. No exhaustion to the upside. Now, what I mean with exhaustion is that we're starting to see some light green histogram bars. That's what I mean with the exhaustion. But we'll just have to wait and see what happens here. Can we continue this, or is this going to be a fake rally and then everything's going to break down? We've been up since almost mid-October here. So taking a pause at this point, when we're looking at the technicals, when we're looking at some overbought levels, things are pointing to probability that we might get some pullback at these levels. So technicals are becoming very difficult now. It's real about the dollar index and see how things are faring out. We know the Fed is still tightening. We know that rates are still going to continue to go higher. We're not anything near bullish when it comes to the Fed or the economy in general. So, you know, earnings are going to continue to go down. We're seeing massive layoffs. There's just so much pointing to slower economic growth ahead, and there's nothing bullish in that at all. You know, these rallies are interesting because you can make a lot of money trading these rallies. So don't get me wrong here. But I'll see you guys in the next video. Don't forget to subscribe and like the video, and thank you so much for watching. Take care for now. Goodbye.